much. So having said this, we're going to switch now to the next panel, which is going to be moderated by Mr. Greg Roumeliotis, who is a very experienced journalist with ESG at Thomson Reuters. So Greg is going to introduce the three panelists. And the idea here is that we're going to give some food for thought before the panel begins. So I'm going to give an about 15-minute presentation with certain ideas and challenges, and then Greg will take on. So let me share my screen very quickly. Greg, please feel free to interrupt me very rudely as soon as I'm approaching my time limit of 15 minutes. So let me, right. So very briefly, I'm going to provide some open questions, at least in my view, open questions in the field of ESG, challenges and smart solutions for institutional investors and policymakers, which the topic of the next panel is about. So the first open question is whether ESG really redefines investment practices. So on the one hand, we have, for instance, the United Nations Principles for Responsible Investing, founded in 2006, where the number of signatories has increased from about 700 to more than 3,000 in 2021. So the signatories are big institutional investors. And the assets under management have increased from about $21 trillion to more than 120. At the same time, as the previous speakers pointed out, we have some giants here like BlackRock, which has updated its principles and guidelines to take climate change risk into account. So this is a statement by Larry Fink, the CEO and chairman of BlackRock. According to this statement, climate change has become a defining factor in companies' long-term prospects, and Larry Fink believes that we are on the edge of a fundamental reshaping of finance. However, we are receiving mixed signals. So I'm going to comment on something which is fresh from the oven. It happened actually yesterday. So here in this photo, what you see is the beachfront of Miami. Miami is one of the cities in US which are under risk that they may be flooded because of the rise in the sea level. So last week we had the Financial Times conference by Moral Money, and Stuart Kirk, the global head of responsible investing in HSBC Asset Management, came into the news because basically he said, who cares about, you know, if Miami is 6 meters underwater in 100 years, Amsterdam has been in the same situation for ages, and that's a really nice place. We will cope with it. Actually, Stuart Kirk was suspended yesterday, and his rationale for pointing out this statement really lies on the fact that there is a lot of bureaucracy in this field, a lot of regulation, and a lot of resources are devoted with fighting with climate change. At the same time, Desiree Fixler, who is actually going to be one of our distinguished speakers tomorrow, has also been in the news. She has been the former head of sustainability at DWS Group, which is the investment arm of Deutsche Bank. And basically, what Desiree said is that DWS was doing greenwashing. So the sustainability propaganda got completely out of control, as the news stated. And Desiree has also been suspended by that DWS. So the question is, do stock investors really care about climate risks, for instance? And we have scientific evidence based on a study with colleagues from the Central Bank of Denmark with Renato Faccini and Rustin Matain. We have provided first-time evidence on what types of market-wide climate risks are reflected in US stock prices. So what we found using textual analysis is that US investors do not care about natural disasters and global warming. So this is in line with the view of Kirk. They do not even care about international summits. Why? Because any decisions taken at these summits are not legally binding, and it takes a lot of time to be incorporated in local legislation if they ever do. So sorry, but Glasgow COP26 is not going to matter for financial markets. However, stock investors do care about climate change risks when the discussion reaches the political arena and the regulator intervenes. So this study is of particular interest to policymakers because it justifies intervention, provided that climate risks are systemic. That's the reason that we had the honor to be invited by the European Parliament and by the European regulatory authorities like EIOPA, EBA, and ESMA to discuss our results, which have also been included in the OECD report on climate resilient finance and investment, and in media and in various blogs, including Columbia Law Schools. The second open question of particular importance to institutional investors is whether sustainable investments pay off. This is not obvious because the investment universe is shrunk, so one may forego investment opportunities. Having said that, the empirical academic evidence is mixed. It seems that sustainable investments do pay off during periods of crisis, like for instance, over the pandemic, over the past 2 years, ESG stocks have proven to be quite resilient, but they do not pay off in periods following the crisis. So for instance, you see here a quote from Bloomberg Green, according to which US funds which follow ESG investment principles have fallen as much as the S&P 500 has. At the same time, the outperformance seems to be the result of mispricing, which is subsequently corrected. So the past performance of ESG investments does not predict future performance. So again, this is a statement very much in line with the common industry practices. And then again, when it comes to strategies, investment strategies like factor investing or even quantifying risk models, the key question is whether ESG is a new factor. The answer is no. This is based actually on evidence drawn by Andrew Wang, who is the global head of factor investing and sustainability in BlackRock, one of the giants in the institutional investment universe. So basically what Wang said is that ESG is not a new factor. It rather reflects existing firms' characteristics. So one needs to be very careful when it comes to specifying the risk factor model and the way that one promotes sustainability products. Here is another example where a green investment may not pay off. This is the famous greenium, which is the difference in the yield to maturity between a green bond, like the 2050 green bond, and a plain vanilla bond. So you see here the green line is the time series evolution of the yield to maturity of the green bond versus the vanilla bond. You see that it has a lower performance. Nevertheless, it attracts interest from investors for other non-financial reasons. Third open question, is climate risk the dominant financial risk? Here I have a picture. The image is from the movie Don't Look Up. So in that movie, you may have watched it. There is a comet coming to Earth and nobody takes action to prevent the imminent destruction. So one may think, like for instance, the director of the movie said that the reason that he put the movie forward was to ignite attention for the public to do something when it comes to battling with climate change. And the idea is that if you put in the air of the comet, the climate, it seems that, you know, climate disaster is coming, so you really need to take an action, but nobody does so. But there is also another way of reading this image here. So the question is the climate the real threat, or is it, say, another type of risk like a comet, or it could be a pandemic, or it could be a cybersecurity attack, or it could be the credit crisis like in 2008. So again, there is a heated debate on this issue as well. And if it is climate change a threat to the financial system, how can we cope with it? Actually, there are two views here. One view says that one should do nothing in the sense that it should let the markets take care of that. So according to Larry Fink, I prefer capitalists self-regulate. On the other hand, the interesting quote here is coming from Tariq Fancy, the former CIO of BlackRock. So Fancy asked the question, what's the best way to tackle climate change? Should you take a position in an ETF, a green ETF, for instance, or should you call your congressperson and demand legislation and a price on carbon? And Fancy says, actually, you should do the latter. You should call your congressperson because financial markets cannot take care of this. Smart solutions for policymakers. ESG actually can be used by policymakers in quite big array of issues. So let me give you an example. This is a proposal I have made. So natural disasters keep happening despite announcements and actions, if any. My proposal is to have the funding of municipalities being tied to their ESG performance. So in other words, the higher the ESG performance, the higher their funding should be from the state. The lower the ESG performance, the lower their funding. Actually, this is analogous to how, for instance, state funding is allocated to universities in UK, for instance, or even nowadays in Greece. The more productive a university is academically wise, the bigger the portion of state funding that it takes. What is the rationale for my proposal? The rationale is that people care only when there is a financial motive. This is actually what our research has shown, and it is also common sense. So in this case, municipals will be proactive and they will try to obtain a seaside blue flag. Well, how can we implement this proposal? We can develop municipal ESG ratings, even for Greece. This is not a novel idea in the sense that in US, for instance, there are municipal ESG ratings. I have provided more details in previous articles of mine. So what are the additional benefits? If you have municipal ratings, these can be used not only by policymakers, but they can also be used by investors, banks, and corporates. Think, for instance, the case where a municipality needs some funding from a bank. The bank can use the ESG footprint of the municipality in order to determine the interest rate at which it's going to lend the municipality. Likewise, when it comes to borrowing through municipal bonds, this is also something which is done in the States. You can use the ESG footprint. Obviously, this is going to be beneficial for corporates and for tourists, because tourists want to go to areas where they have a good ESG footprint. And of course, for instance, in the case of Greece, this is going to be beneficial for the entire economy, in particular when it comes to brain drain, how to reverse this to become a brain gain. Nobody wants to live and work in a place which has a low ESG footprint. Concluding, ESG has various challenges for investors, corporates, and banks. For a start, the informational content of ESG ratings is not clear. We heard previously about the aggregate confusion. This means that ESG ratings differ substantially between ESG raters. Just to give you an example, the correlation between ESG ratings across various ESG raters is lower than 50%. Whereas if you think, for instance, about the correlation between credit ratings among credit raters is above 95%. So you see that you have here an issue. At the same time, ESG ratings, they're mixing material and immaterial issues for a given industry. The question with ESG ratings is also whether all brown firms are really brown. So for instance, take for instance an energy company which has a low ESG rating because it is a polluter. At the same time, it is well known that energy companies are among the greatest innovators in terms of bringing in new technology. So we should be very careful here not to throw the baby away with the bathwater, as the English say. We have the issue of greenwashing. And finally, last but not least, the incentive structure of ESG raters causes distortions. So there is a very recent academic study on a leading ESG rater. I'm not going to say the name of the rater. So what is the idea here? What is the incentive for an ESG rater? The ESG rater is selling its product, which is the ESG rating, to institutional investors. to incentivize the institutional investors to buy this product, the ESG rater needs to document that the ESG rating that it produces leads to future stock outperformance. So what it has been shown is that some leading ESG raters, what they're doing actually is a data mining exercise. They keep recomputing the ESG ratings so that to ensure that in their back testing, they're going to show that the ESG rating leads to stock outperformance. Obviously, this is a major distortion. Another challenge is that we need to quantify climate risks in real time. The decarbonization of portfolios is not always feasible because of the high transaction cost, or it may not even be desirable because it may hurt the performance. So think, for instance, of a pension fund which invests in illiquid assets. Selling, decarbonizing the portfolio is going to entail huge transaction costs. Finally, there is an open question whether divestment may have no real effects. So the idea here is that somebody is not happy, an institutional investor is not happy with a firm, so it's going to sell the stocks, but somebody else is going to buy the stocks. So it's not, divestment is not like boycotting a product, right? So for the divestment to have a big effect, you need to have a big portion of green investors in the universe so that the cost of capital of the firm is affected through the divestment process. Final slide. ESG is a timely topic, yet there is still a long way to go. The engaged parties need to identify the open questions. They need to admit that doing well by doing good may not always be possible. They need to trace distortions caused by the incentive structure of the key ESG players. There is a huge industry here, the various parties, conflicting interests. And finally, you need to answer honestly two related questions. Do I believe in ESG? And if I do, am I willing to suffer any financial and political costs to achieve the ESG transformation? Addressing challenges is not trivial. It requires expertise and genuine willingness to reform. So that's all I had to say. Thank you very much for your attention. And now I'm passing the screen to Greg. So Greg is a very well experienced journalist. He's a real expert in ESG, and that's the philosophy at IFFR. We need experts here. And Greg, the floor is yours. Thank you so much.
Thank you so much, George. Let's start maybe with Dr. Avgeronopoulou. You're a Greek member of Parliament, chair of the Parliament's Environment Committee. Do you want to run us through briefly the regulatory framework as it applies at the moment for Greek businesses on ESG, both at the European level, that is obviously EU-wide, but obviously Greek-specific initiatives in the works?
Yes, thank you very much. As the chair of the Environment Committee of the Parliament, I had the opportunity to lead many discussions, both on the national and the European level on this, with the participation of some of the participants here today, as Chris Magalou, and thank you very much for that. Actually, today, we are passing through, before the Parliament, a new law that is very relevant to ESG criteria. It is the new and the very first climate law of Greece. So the Greek climate law that is going to be valid in the coming, let's say, 15 to 20 days from now, it links very closely the possibility of an enterprise to be financed by European and national funds by its climate specifically, and in general ESG performance. And it links the Greek legislative framework of financing and of the operation of businesses to the European Union ESG related legislation, and especially the latest legislation that is about taxonomy. So, and this is the very first law that does that. So both in Greece and in Europe, we have a series of smaller pieces of legislation that they all together create the sphere and the legislative framework for the ESG criteria. I would like just to emphasize on the latest piece of the EU legislation on the taxonomy, because this is actually the only piece that gives us, through the taxonomy criteria, some instruments that in the member states of the European Union, we are able to implement and have some more clear guidance on whether on an investment or a project is sustainable or not. Even at this point, with the latest EU legislation that includes taxonomy, the things and the political choices on the EU level, they are not very clear. For example, at the beginning, the European Union started to categorize as sustainable investments that they were linked from the environment perspective and the climate perspective to the renewable energy sources and zero carbon sources, etc. But by enlarging the discussion between the member states and all the private and other institutions, we have come up to a legislative framework that puts almost everything to be qualified under this taxonomy. For example, even natural gas related projects, they are considered to be sustainable. And the latest surprise, it was that the European Commission considered that it is good to add under this taxonomy even the nuclear power investments, of course, as a transition sustainable investment, not as a sustainable investment, sustainable sources of energy as such. That means that starting from the European Union level, we do have some pieces of legislation, but these pieces are not very clear yet, and they are highly debated. That reflects very easily the debates and the uncertainty in the member states' legislation as well. So as a result, today we have a new climate law, as I just mentioned, that links the climate finance of upcoming projects to the EU legislative framework and the taxonomy, but is pretty open which actually projects qualified to get sustainable finance and what are the projects that qualify as ESG, that they respond to ESG standards. And the picture becomes even worse when somebody refers to the international, to the global level, where there is no one single international instrument from the public sector for the UN, for example, or the UN Framework Convention on Climate Change for Climate, etc., that defines the criteria for financing. So one first demand on behalf of the legislator is to be able to function in a more clear and defined legislative framework from behalf of the global governance institutions and the EU governance institutions, in order us, like the domestic legislator, to be able to adapt and create better domestic laws.
That makes sense. And do you know, as far as the Greek government is concerned, which specific aspects of the EU taxonomy it takes issue with? I know you mentioned kind of, natural gas and nuclear, and obviously in the context of the energy transition, but also what's happening at the moment with high energy prices, the war in Ukraine, that has definitely also, affected, the calculus as far as kind of like the pace of change to sustainability. So what are the specific areas, that the Greek government is looking basically for changes in, or just kind of like to modify it in the context of, Greek business?
Well, actually, the Greek position regarding nuclear energy is very clear, and it's the same no matter which political party is in charge. So we are not interested into developing any nuclear energy infrastructure in our country. So we're not interested in this type of finance anyways. And we are going to use natural gas only as a transition resource of energy, because as you just mentioned, the energy prices are very high. This, of course, rised with the coalition, the crisis between Ukraine and Russia, but it had started many months ago. So at the moment, and for the coming 1, 2, or 3 years, let's say, so Greece is not going, or even a little bit more, we're not going to be able to run only on zero carbon energy sources. And we need this transition source, meaning referring to natural gas. And at the same time, although Greece, and we're passing this today by law, we have actually targeted to be lignite-free, to decarbonize our energy system by 2028. Still, we need to use for some more months, or maybe 1 or 2 years, our lignite sources. The thing is that we're still working with our commitment to decarbonize by 2028, and we're working very much on this. Unfortunately, Greece and other countries, we hadn't taken the development of the alternative resources of energy as seriously as we should many decades ago. So now we're running behind the facts, we're running behind reality. And the only thing that we can do is focus as much technology and as much funds we have to the development of renewable sources of energy. Because if we have a problem now, if we face a problem now with the high prices of the electrical energy, we're going to face a huger problem in many aspects in the years to come, with climate crisis, with the prices of energy, with food security, etc., etc. So the best way to respond to such a crisis is to just start working on solutions against the crisis. No time to lose.
Got it. So let me now turn to Mr. Megalou, CEO of Piraeus Bank. Would you like to run us through a little bit briefly the bank's ESG program, and then speak specifically about its role in helping Greek business with sustainable investment, the switch to sustainability and ESG? Chris, you're on mute.
Thank you. Good afternoon. Good afternoon, ladies and gentlemen. Ms. Avgernopoulou, very pleased to meet you again, and all our audience. It's Christos Megalou, the CEO of Piraeus Bank. We take pride in Piraeus of our involvement in ESG, climate change, and all the work that we do in the space. Piraeus is the leading commercial bank in Greece and a strategic advisor of choice to many Greek businesses. We have about 25% market share of performing loans, and we are very active also with retail clients, investors, and domestic businesses. And we are focusing very much on sustainability. We have a string of sectors that, as we announced in our 22-25 business plan, is going to be focusing on the development of those sectors, and that's manufacturing, hospitality, and energy, including, of course, in a very big way, renewable energy and sustainability, where we are the leaders. In our plan, we are planning to be directing about 18 billion of new loans towards those sectors, and that's 50% of our total envelope. And for us, the sustainability part of that envelope, of our banking envelope, is about 9 billion of new production for 2022 and 25, which is about 4 billion of new loans in retail and businesses, about 3.5 billion inflows to our ESG mutual funds. We have been the leader in creating, for the first time in Greece, ESG mutual funds that we are distributing to our client base, and about another 1.8 billion of ESG bonds, which we have already issued a 500 billion one by the end of last year. We want to be continuing play an important role in financing sustainable companies, sustainable investment, and sustainable parts of the Greek economy, and also as part of the Greek 2.0 agenda, which is part of the EU and Recovery Fund that plays a key role in the development of Greece in the next year to come. That's part of the next generation EU funds, and which together with other national and EU funds almost accounts for investment of around 40% of GDP over the next 5 to 7 years, and we aim to play a big role around that. And also just to say a few things about the work that the European Commission is doing, and for which we believe that we will be in a position to play a role in disseminating some of those plans in the Greek market. As we already know, the Renewable Energy Power EU plan has been announced last week, speeding up the green transition and spurring massive investment in renewable energy. We're talking about an extra 210 billion between now and 2027. These are significant resources that have to be deployed, and we aim to be, as the leading ESG bank and climate change bank in Greece, at the forefront of disseminating those to the Greek economy. Decarbonization, energy transformation, green and digital economy are playing, and we believe they can play a big role in the new reality that we are facing. So we are supporting those sectors as Piraeus Bank. Renewable energy sources, energy saving, responsible agriculture are among our leading in our sustainable development financing in our portfolio. Also, energy and infrastructure are very big, and that will enable Greece to achieve its 2030 national target, which is about 7.2 gigawatts of new renewable energy to be developed. So I guess we're not into nuclear energy in Greece, but renewable energy in the form of wind farms, solar, hydro are very much in the forefront of what is going to happen. And we are ready to finance a large part of that when the time comes. Now, we have issued a green bond, and that was one of our first initiatives back in the end of 2021 in October. 500 million senior preferred notes, total book exceeding 900 million with more than 70 investors. We have been audited by Sustainalytics in coming up with our governance and infrastructure in relating to disseminating as part of our green bond framework these funds. We have already deployed in broadly 3 categories where we have strong presence: renewable energy, green buildings, and energy efficiency, about 200 million out of these 300 million. And we have to exhaust those within 24 months from issuance. and obviously continue with more bonds to coming into the market. I couldn't, as a CEO of the bank, I couldn't think that we were going to be issuing MREL-related bonds without that being a green bond, given that we pride ourselves as Piraeus Bank and are actually quite effective as being the green sustainable bank in Greece. And we want to do more in both investing in reducing our own emissions, but also advising and helping reduce the emissions of our clients.
Okay.
And also advise our clients how to prevent greenwashing, how to be transparent, and being able to understand the environmental benefits of products and services, and what does that mean for the society. I'm glad to say, and I'm finishing, Greg, in 1 minute, that we have been recognized for this by the Financial Times as being the only Greek corporate, including banks, that is included in Europe's Climate Leaders for 2022. And we are very happy for this accolade, which reflects our great reduction in Scope 2 and Scope 1 greenhouse gas emissions for the period 15 to 2020.
Okay. One more question for you, Chris, quickly before I introduce and come to Mr. Mitropoulos. Very specifically, to pick you up on the point you made about the disbursement of funds for the transition to renewable energy that Dr. Avgeronopoulou also touched upon. Specifically, what do you think can be done from the Greek state, from the EU, from regulators, from other stakeholders, private sector partners, to accelerate the transition, to make better use and capitalize on Greece's potential for renewable energy, which, as Dr. Avgeronopoulou pointed out, has not been fully tapped? What more do you think can be done specifically to help you fund, those initiatives?
There is no doubt, Craig, that the recent geopolitical turmoil and the Russian invasion in Ukraine and the crisis following that, the oil and gas situation, both in terms of prices, but also possible ban of use of Russian oil, is creating a turmoil in the industry, and that also affects the way countries and geographies are looking at the ESG agenda and climate change initiatives and so on. But of course, we shouldn't forget that the EU has been very bold in their actions in actually earmarking significant amounts. As I mentioned, the Renewable Energy Power Initiative is talking about billions and billions that can be deployed in actually boosting up infrastructure one way or another. The banks have a big role to play. Of course, whenever you give incentives, either in the form of tax incentives or subsidizing cost of actually building infrastructure, is a significant boost, gives a significant boost in actually being in a position to develop plans for the sector, and the private sector will respond to that. And this has been the motivating factor of Greece's development in this sector for a few years and for quite some time. I think it's a combination of being a responsible organization on the one hand, or a nation of being responsible on the one hand, providing incentives on the other, but also taking advantage of the vast funds that are being deployed by the European Union to be effective in actually developing solutions and plans and reducing the reliance on oil and gas and increasing the footprint on renewable energy agenda. And in Greece, we have solar, we have wind. We will be developing more of these plans going forward. It will take time, but I think we are on the right track.
Okay. And let me bring in Mr. Mitropoulos, who is the voice for Greek businesses on our panel. He's Director of for Business Environment and Regulatory Affairs at SEV, the Hellenic Federation of Enterprises. So based on what you've heard so far, what do you think is implementable for Greek businesses and what remains a challenge? What works and what doesn't work?
First of all, let me thank for the invitation and also thank for the interventions, Dr. Avgerinopoulou and Mr. Megalou, which surely they already covered a lot of ground. I would like to cast the approach here under the lens of corporate governance. And I will explain why. At SEV, we believe that corporate governance is a matter of principle. And it means you have transparency. It means you have evidence-based decision-making with solid arguments within the company. All these are indispensable ingredients of a good corporate governance structure. And when you have this in place, it's actually for the company and the directors of the company a very strong tool. And with that tool, you can provide substantial and tangible results. There's often the question about these results, but in the end, you can see them. You can see that the companies who adhere to these principles, who act on values through time, they are resilient. They can go through adverse periods of time and then reemerge stronger. And so they actually become more resilient. They can also, they offer a better working environment because things are transparent. You can see who does the work, who brings the results. You have internal accountability. This motivates the team. The team then offers more. They come with a smile to the company. They believe in the company. They offer their best self every day. And at the end of the day, you can see that. So what does this mean to our agenda? It means to our agenda that companies that adhere to such principles, and they exist also in the Greek market, they exist in the European market, in the end, they can take on board the whole ESG agenda better. And they can actually, they have the tools to transform the new landscape also into opportunities. They can identify the opportunities, they can motivate the resources to take advantage of them. Now, that is not always a given. And it is especially not a given in challenging regulatory environments, because when you have challenging regulatory environments, it's very difficult to have also a good corporate governance. It's like you need governance and then you can have also corporate governance, and corporate governance is the tool that will help you face adversities and challenges like the ones we have in front of us. And here comes also a point to make with respect to the emerging regulating framework, not only the Greek one, but even more the European one. It is surely ambitious. Surely nobody can do anything but subscribe to the goals. But at the end of the day, we need to not only rise to the challenge, as Dr. Avgerinopoulou accurately said, a lot is happening in a very short of time. So we do not need to forget that what we are constructing needs also to be workable and proportionate. It needs to offer also sufficient legal certainty and clarity so that the private sector can actually invest along the new path that we all see we have to take. So that is one thing I would say and ask for, is exactly to not forget that we need to make this new framework that is emerging so fast that we need to keep in mind that it needs to be workable. And that is easier said than done. Now we have some insights here because we already have a new corporate governance law framework in Greece with the code that is now in force. And we can somehow see, we made a survey before the implementation of the new law with a large pool of companies. It was with the Federation of Listed Companies and the stock market, we made this survey. So we had a good idea of how the market was looking at the new framework. And what was surprising is there was a minority, but a strong minority, I would say about 20% along the questions and topics I'm going to cover, that anticipated great challenges with respect to conforming with the new law. And these areas that were identified, I want to share them with you because they are interesting. They were worried about the sustainability reporting and the board training, which is kind of surprising, especially the board training, because like it's more a soft item rather than perceived as a hard, say, conforming with the law item. What we also saw that after the law was passed, and we made a couple of follow-up workshops in the past couple of months, and we could really see how the companies ticked the boxes, and everybody was happy with ticking the boxes of the new law. Everybody felt that looking at the structures and the codes in the company all together, because most of them had them in place, but they were put there at different points of time. So everyone looked at everything in a holistic view. And afterwards, it was an expensive exercise, but afterwards, everybody was happy that they did it, and everybody thought that they were better off doing, having done this exercise. But there were a couple of points that I also think are worthwhile sharing. One is people were worried about too much bureaucracy. They were worried that we are going into a mentality of writing reports that are going to reduce the flexibility of decision-making at a time you will have to take risks, because the path towards sustainability, it's also risky paths. We do not only have the risks of the legacy we come from, we also have the risks of the new pioneering paths we're trying to open, be it with technology, be it with investment. And the liabilities that come now towards boards are also a concern, and people need to be informed about them. They're not always informed about them, so they are afraid of them. That's a challenge. And the main message that came out was that, okay, now we have the new framework, we comply with it on paper, but it's a new tool. We need to get to know how to use it effectively, both to fulfill more than compliance with the law. So everybody was aspiring already to more than, aiming for more than the law. And in many cases, they told us we're doing already more than the law asked us to do, because we perceive that in order to really achieve the goals we set, we need to do these things, even though they're not prescribed by the law. And they need to learn how to use, let's say, this new tool. So I would say that with respect to the legislative framework, especially the corporate governance dimension, because even the ESG, the E and the S targets, in order for you, as a company, to be able to implement them, in the end, the resources you're going to call upon, the risk management, assessment, and prioritization and decision-making mechanisms you're going to motivate within the company, these are the governance mechanisms. So you need to have these in place. They need to work properly for you to be able to answer to the questions put by the E and the S agenda. So putting this in place, it's kind of the starting point. Then you have to learn how to use this tool. And that brings me back to the initial point. It really will help if the whole new construct Europe tries to put in place, and that is rightly ambitious, and it's rightly ambitious not because we say it, but because the planet says so. It needs to remain workable, and it needs to be balanced, and that means that you need to be also aware, for example, of challenges like not all the data is going to be there immediately. So you need to have a flexibility there that will allow you to get things done now and charter your path. For example, Dr. Avgeanopoulou mentioned the case of the transition fuels and how these were incorporated in the taxonomy. So the taxonomy was not initially designed for transition, whereas transition is of paramount importance. It was mentioned previously also about the narrow scope that is covered currently by the taxonomy. This is also a challenge. So if you want to cover broader ground, you will need to be able to do so in a pragmatic way. And keep also in mind that the taxonomy now, again, Dr. Avgeanopoulou clearly said so, how it starts to be legally binding for financing of companies, which was not part of the initial design of the taxonomy. So in order to keep this workable, we really need to get the details right. And as I said, keep in mind that at the end of the day, the market needs to be put on a path where it can actually adapt to the new reality.
Got it.
So that we have the best results.
Okay. Let me try to squeeze in some audience questions. One for you, Michael, to pick up on what you were saying. So one of the members in the audience asks that some small and medium-sized businesses in Greece are, quote, according to the person asking the question, notorious for not adopting ESG practices for a number of reasons. How do you plan to engage them in ESG strategies and convince them that ESG is not just a legislative obligation, often as you talk about, but also like an opportunity? For example, if they disclose more ESG data, they can attract more investment.
After extensive deliberation in the past years and months, I would say that the role for mentoring and information dissemination will be paramount. And the players here are going to basically be everybody. Definitely it will be the governmental sector, and the governmental sector is not only national, but also the supranational one. So it means that there needs to be a strong educative arm in the whole effort that is being made by the legislator and the government and the authorities right now. There is a very important role for market leaders, that's those companies, irrespectively of size, that already are convinced of these principles. And as I said, they go hand in hand with good corporate governance, and they also give tangible results. For example, you get easier money at better terms, not because some law says it, but because the market starts to ask for it more and more. So these companies that are spearheading the effort, they have a very strong mentoring role in their supply chains. And it is, I'm selecting the word supply chains deliberately and very carefully. And as also Mr. Megalou said, the banks and the houses that provide finance, they have a double role. One of them, one role is to provide finance, but the other role is, along with the finance, to also disseminate know-how and inspire and guide the companies. I believe that if all of these work together, that we actually can achieve very good results in a surprisingly short amount of time. Of course, it is also important, and it needs to be stressed, that legislation is not hindering this effort. For example, if you have legal uncertainty in special planning regarding renewables, it will be difficult to actually get investment on the ground. We see that there was, for example, an extension in it is very important to have the special plan for renewables well written, soon legislated. For example, this would be very important in that dimension. It's only one example. We know that because exactly as Dr. Avgeropoulou said, the country was lagging for decades in that areas. Also here, a lot is being done in an amazingly short period of time, but also a lot remains to be done. And it will be a huge challenge to get the remaining pieces of the puzzle in place very soon, so that we can take the most advantage of the European financing tools to actually get investment on the ground from companies from all sizes, with the support of the banks and of other kinds of finance. So that's the kind of challenge we have, and it needs cooperation by everybody to get it done in an amazingly short period of time.
Got it. So another question, this one for Dr. Avgeropoulou, and it's another tough question. Looks like people in the audience like hard-hitting questions. So the question is that while the new Greek climate law does promote the transition to a low-carbon economy, at the same time, the Greek Parliament has not always in the past fulfilled existing law to protect their environment. And the questioner points out that the Greek state keeps postponing the demolition of illegal buildings or houses, built, next to the sea, and asks, is this contradictory, and how committed is the Greek government to sustainability as opposed to implementing initiatives that come from the European Union?
Well, let me start from the last point of this question, and thank you very much for the question to the audience. Actually, Greece is one of the member states of the European Union that is leading the climate debate, the climate initiatives, and the environmental initiatives of the European Union. We're not following them. We are among the very first countries that we propose new things on the EU plate. And this is happening very intensively, notice, with the current government, but it has happened even less before. For example, Greece and Germany, they were the very first countries to speak about the need for vast and large reforestation and an EU fund for reforestation to protect our forests and to restitute the burned forests, the forests that we've lost over all these decades. And Greece is the first to speak about the need to regulate and provide additional funding for example, for green shipping. Greece is one of the countries that is actually leading the shipping field globally. And still, we have a lot of way to go in order to have green shipping in our neighborhood. So the Prime Minister, Mr. Kyriakos Mitsotakis, has proposed to the EU countries to establish a green shipping fund. And Greece also is among the very first countries to work on climate finance. For example, Greece is going to issue a very first sovereign climate bonds. in the coming months. So we're doing a lot of things on this. Of course, there are some sectors of the at-large environmental legislation, let's say so, that has not been put in the right track yet. And the issue with the illegal buildings, especially very close to the coastal areas, is a very hot topic for Greece, being a coastal country, because not only from a legal point of view, like conformity with the legality with the law, but also from an environmental point of view, it's not nice to see our coastal areas to be abandoned. If you have an illegal building, then it is not easy for you to get finance in order to rebuild it. It's not the environment around it might be full of waste. You don't have enough waste management and green infrastructure in general around these houses. So what the Greek government is doing is that actually is bringing a new law in order to tackle with this exact issue that was the core of the question by your audience, actually in the coming 2 or 3 weeks. So let's see which the choice of the government will be. Let's see how this debate is going to go. And I invite your audience to participate to the public debate on this new piece of legislation. It is going to be very interesting.
Yeah, we'll be watching for that. Okay, last question to squeeze in for Mr. Megalou. The question from the audience is, if one imposes ESG criteria in the provision of loans, do they end up, all in all, restrict the provision of capital that is badly needed in the Greek economy? Chris, you're on mute again.
Thank you. Thank you for the question, and thanks the audience for this. Look, I mean, there is always a trade-off between, longer-term goals and short and medium-term. What we're doing here as banks, but also as society, is trying to balance this in a way that makes sense both for the immediate growth of a country like Greece, coming out of years of crisis, but also looking at the future, with the long-term aim of our citizens in mind. So we have to draw a balance. There has to be a transition, and transition is I guess, the magic word here. And of course, there has to be moderation. So we still have quite a lot of room to go to say that Greece, but also the work that the banks are doing, is going to be only directed to renewable energy and other renewable sources in order to restrict growth in other sectors. However, we have to be mindful that we are going into that direction. And this is what we are trying to do by also educating our clients that it is to the benefit of all of us to move ahead in the green agenda, in the climate change agenda. And of course, in the grand scheme of things, this will take time, but I think there will be plenty of resources to be able to address and balance financing and growth, both in a transition, but also with renewable sources, energy sources in mind.
That's great. Thanks everyone for your time. That's it. We've run out of time. It was a fascinating discussion. As you can see, we're just scratching the surface. So much more we can talk about, and hopefully we'll get the opportunity to do this again. Thanks everyone for attending, and looking forward to the second day of the conference tomorrow.
Thank you very much. Bye.
Thank you very much.
May I thank all our panelists, so Mr. Christos Megalou, Mr. Michael Mitsopoulos, and Dr. Dionysia Vyerinopoulou, as well as Greg Roumeliotis for this very exciting panel. Thank you very much for your time and for your valuable thoughts and for accepting the invitation to join us on board. So may I conclude the first day of the conference. Tomorrow, we're going to have the second day starting at 2 o'clock UK time with the Minister of Finance, Mr. Christos Taikouras. And then we're going to have, again, distinguished speakers on venture capital and ESG. And then Desiree Fixle, Maya Hennerkes from EBRD, and Mark Tersek, the former advisor of President Barack Obama and former partner at Goldman Sachs. And the day is going to be concluded with another roundtable discussion with distinguished panelists and moderator from Bloomberg and Reuters. So thank you very much, all speakers, chairs, and panelists and moderators. And of course, may I thank the audience. I hope that you found it insightful and stimulating. And we're all looking forward to seeing you tomorrow for a second exciting day. Thank you very much. And have a nice evening or have a nice day, depending on where you reside. Thank you very much. Bye-bye.